It was June 1991, and Michael Jordan had just won the NBA championship. In the state of California, well, they sent him a bill for it. You see, that year, Jordan was making $2.5 million. And while he didn't live in the state of California, while he didn't play for a California NBA team, the franchise tax board for the state of California determined that because he had played a couple days on their soil, they too wanted their cut. And you see, the state of Illinois, they fired back at this, and they actually put a law into place called Michael Jordan's Revenge, which simply said this: if you are going to tax our athletes in your state for the days that they played there, then we are going to do the same. And we are going to tax your athletes in our state when they come here. Well, every other state started to watch, and they realized two things: that athletes are making a lot of money and that their schedules are public. And they too could be getting a cut of this tax revenue. Today, California makes more than $229 million a year on visiting professional athletes coming to their state and playing. And every player who signs a professional contract in America is entering a financial war that many didn't even know existed. But to understand how deep all this even goes, we need to understand two words: duty days. You see, think about what California actually did to Jordan. They weren't taxing him on his entire salary. They weren't even taxing him on just the games that he played there. No, they wanted to tax him on every day that he had spent there, every duty day. That meant off days, that meant workout days, and that meant game days. They wanted to take a cut for each day that he spent there of his $2.5 million salary. Within a few years, it had spread to almost every state. And their weapon of choice? Well, the same one that California used: duty days. Today, an NFL player files between 8 and 12 state tax returns a year, an NBA player up to 20, a Major League Baseball player up to 25. And it all started because of what California did to Jordan in 1991. And before this video is over, I'm going to show you how players have started to fight back and how one player saved more than $2.7 million in taxes by being smart about a $100+ million contract. But before we do that, we need to shift from where this stops being a history lesson and starts getting genuinely insane. 2017, Hurricane Irma is bearing down on Miami, and the Miami Dolphins determine they have to evacuate. And what do? They make a deal with the Dallas Cowboys to be able to use their practice facility. But the key here is the Cowboys' practice facility, it isn't in Texas, it isn't in Florida, it's in California. So while they're doing the right thing, while they're evacuating outside of a natural disaster, the state of California is sitting there saying, well, you're spending time now in our state, and we want to be able to collect tax on that. And that's exactly what Sports Illustrated reported that they did. And this isn't just a one-off. This is how California operates. Consider when Dez Bryant was playing for the Cowboys, and the Cowboys were hosting their training camp in Oxnard, California. Every single day that the Cowboys hosted there, it cost Dez Bryant thousands of dollars in state income taxes. And it wasn't because he lived there. It wasn't because he played for a team there. It was simply because the Dallas Cowboys were hosting their training camp there. And it was part of his duty day calculation. You see, the truth is, these states don't care why you're there. They don't care if you're preparing for a game or if you're evacuating a hurricane. They just care that you were there. And they care that that goes into your duty day calculation. And they care that you pay your bill at the end of the season. And it's not just California. Take Tennessee, for example. They used to have a flat $2,500 tax for the NBA and the NHL teams that came to visit. And this meant that players, whether they were making tens of millions of dollars a year or they were making league minimum, all had to pay that same number. Now, it was typically capped at 3 days or $7,500 per year. But consider this story. Chris Johnson had signed a 10-day contract with the Memphis Grizzlies. And in that 10-day contract, he was guaranteed $54,000. Now consider, he's in the state of Tennessee. So Tennessee said they want to collect their flat tax, $7,500 from his $54,000 10-day contract. The same bill that superstars on the same team like Marc Gasol and Zach Rudolph got. Players who are going to be earning millions of dollars that year and be with the team the entire season. And this is a direct quote from Johnson when he got his first paycheck. I didn't know much about the tax, but I did see when I got my first paycheck, there was a lot of tax taken out for a 10-day contract. Players eventually filed suit, and Tennessee repealed this act in 2016. But here's where the story turns, and you start to see how athletes today are fighting back against duty days and the jock tax. 2022. And Tyreek Hill has 2 contract offers on the table in free agency. They're both for roughly the same amount of money, $120 million. The only difference is one is with the New York Jets and one is with the Miami Dolphins. One has a top tax rate over 10% as a state, and one has no state income tax. And this is a direct quote from Hill after he chose the Miami Dolphins. It was very close to happening, but it was just those state taxes, man. I had to make a grown-up decision. Well, that grown-up decision was worth roughly $2.7 million in Hill's pocket because of the state tax difference. Same contract, same terms, different state. Now you multiply that out over the course of a career, and we're talking about players that could be earning millions of dollars more in their pocket by making sure that their contract is either structured the right way or that they're in a state that is friendly to state taxes. Now consider this contract structure. Kyle Tucker just signed with the Dodgers this past offseason. 4 years, $240 million. Now, we all know by this point in the video that California is not friendly to professional athletes, and they're certainly not friendly when it comes to state income taxes. So what did Tucker do? Tucker structured his contract in a unique way that paid out tens of millions of dollars in the form of a signing bonus and not salary. So here's what that actually means. $64 million of the contract was structured as a signing bonus. And if Tucker did planning the right way, and he was a resident of a no state income tax state, that signing bonus, assuming there's no abandonment clause language in there, which means it would be taxed as a true signing bonus. Well, California, they have no right to tax any of it because that signing bonus will get taxed in his state of residency, not where he's actually playing his games at. So although the vast majority of his $240 million contract will still be subject to some level of California state income taxes, the $64 million that's going to get paid out as a signing bonus is outside of that. This isn't an accident. Structuring your contracts, timing of payments, and making sure your state residency is set up the right way before you ever get paid the contract. These aren't just footnotes. No, with the right team in place for an athlete, this is millions of dollars more in their bank account. And the key here is hiring those people before you ever sign the contract, before the ink's ever dry. And this is how athletes are fighting back. You see, this war started in 1991 when California saw an opportunity. And it created this epic battlefield that we see today. But the reality is, as a professional athlete, you can fight back in this war. And here's what I want you to take away from this video. Every contract number that you see, whether it's on the ESPN ticker or it's on your contract itself, is just the starting point. It's not what you end up with in your bank account. You see, what you end up with in your bank account is going to be all based on how you plan around making sure that you're maximizing your opportunity set. The system that California built in 1991, it's still running today. In states, they're only getting smarter when it comes to all this. And for the vast majority of the past 30 years, athletes have been walking into this war blind. But it's not the case anymore. The ones who aren't, they found the right people to not just negotiate the contract, but make sure that the timing of payments, make sure the structuring of the contract, and make sure that the state residency is all set up well before that ink dries. So while as athletes, we always think of the game being played on the field, we have to also realize that there's another game that's being played off the field. As always, my goal is to help you get smarter with your money. Until next time, my friends.